The RealClearEnergy Future Forum is discussing the future of energy and if we're ready, as well as the mindset we will take, whether it be abundance or scarcity. We discuss the heavy lift, regulation, capital, and political will. I'm joined now by Terrence Keeley, the chairman and CEO of 1.6 and the Impact Evaluation Lab.
Well done.
You just gave...
That's a mouthful.
It is a mouthful. Well, you just gave a fantastic speech on spend, baby, spend, and the need for capital to make our energy dreams a reality. Right. Obviously, you need money to make everything happen.
We spend $3 trillion a year on this.
Chump change, right?
Yeah.
Just a drop in the ocean.
Relative to global needs, it's not inappropriate.
So, in the era of abundance, how do small allocations make an aggregated difference?
Oh, what an interesting question. I mean, small allocations. I would probably answer that question in a way that you wouldn't think, which is that how are retail investors, which are small allocations, impacting our energy investment mix versus institutional investors. Institutional investors would include pension plans, insurance companies, sovereign wealth funds, but also direct allocations by the state. Small allocations, retail allocations, are a very small component of that $3 trillion that is spent. Almost all of it is institutional, which means that it's very much impacted, Maggie, by a regulatory environment. You know, an insurance company allocates capital based upon their cost of that capital, which is a regulatorily driven determination. Sovereign wealth funds, endowments like university endowments, are less impacted by regulatory considerations. So, more of a complicated question than you probably thought it was, but a good question.
No, I appreciate the answer.
It's a good question.
You were a friendly critic of ESG from within BlackRock. Mm-hmm. What advice would you give to BlackRock and others who might have invested in scarcity as we move forward into abundance, and maybe to invest in abundance?
Yeah, let me actually modulate the question a little bit. I have such high regard for my colleagues at BlackRock. I came to a different conclusion on how ESG funds were actually likely to generate the outcomes that they were promising, which is that they were supposed to do well and do good. Mm-hmm. They were supposed to outperform the market, or at least match the performance of the market, while performing some type of beneficial outcome societally or environmentally. I studied it for quite a period of time and concluded they were going to do neither. That is to say, they were far more likely to underperform the market because they were excluding whole industries like oil and gas, and they were very unlikely to actually generate a cleaner world or a more sustainable world because they were divesting from the precise industries that most needed to change. Let me put it to you this way. You can divest your way to a green portfolio, but you cannot divest your way to a green world. If we want a green world, we're going to have to invest. If you want a green world, we're going to have to do a lot of what we've done. What we've done over the last few years, in my opinion, and I think the consensus of this group, is that we've in some ways over-invested in sustainability versus the two other variables that are so important, affordability and reliability. I just mentioned the issue that happened in Spain and Portugal. It's very, very clear that broadly speaking, as an optimal energy mix, Europe has gotten it wrong. Europe has underinvested in the types of energy sources that are most affordable and most reliable. They have overemphasized cleanliness as an objective, and they're bearing that cost. In this case, it's a real financial cost. They are actually paying 4 times as much for electricity in Europe as we pay in the United States. Wow. Europe pays 4x what the typical American does for electricity. Just think about how that follows through in terms of international competitiveness, what that does to your industry, what it does to your exports. It is unsustainable. So the remarkable thing is, by embracing the sustainability thesis whole scale in Europe, they've created an unsustainable economic situation.
And so to onshore, we're going to have to build, baby, build, and build a lot. So how do we get beyond barriers that are in place right now?
Yeah, so barriers. So the cost of capital is a barrier. You basically have to go above a threshold to actually have private capital make its way into this mix. Private capital does not like to take risks. They like to have an optimal return on the risk unit that they are undertaking. And what I would argue is that the broad need for just more energy of all types, particularly energy that is not intermittent, particularly energy that is more reliable, puts a lot of pressure both on public agents, more so than private agents, for figuring out how will we fund nuclear at the level that we should, for example. I mentioned on the stage, we spend about $50 billion a year on nuclear. We've spent $500 billion a year on solar. A typical solar plant lasts about 20, 25 years. A typical nuclear plant lasts about 60 years. My God, if we were operating in a truly optimal world where cost of capital was exactly what it should be relative to these objectives, affordability, reliability, and cleanliness, it's very clear we would be doing much, much more in nuclear than we're doing in wind and solar. The offtake price that the state of New York paid for wind power for the Empire Wind 1 project that just was $155 per megawatt hour. The average New Yorker pays around $37 per megawatt hour for electricity. It was being subsidized to the tune of 100, basically 4 or 5x. This is crazy. We cannot continue to make these decisions where we are subsidizing these, in this case, the cleanliness variable, at such an uneconomic level. It ends badly. And it's certainly suboptimal.
Definitely sounds very suboptimal. Is there any message that you'd love to leave people with?
Well, getting the energy mix right forever is a really critical element of human flourishing. There is no such thing as human flourishing without energy abundance. This was a thesis of last year's forum. Who's in favor of energy abundance? Who's in favor of it? Everyone should be in favor of energy abundance. That should no longer be a question. So goodbye, Greta Thunberg, and good luck to you. Now we can have the debate of where we should be putting both our public dollars and our private dollars to work. It's far more predictable where private dollars will go. They will follow the risk-reward optimization function. They have to. It's part of a fiduciary world. So getting our public policies right and philanthropic dollars right will make a lot of difference on the margin with regard to our future energy mix.
Terrence, thank you for your time.
Okay, thanks, Maggie.